They probably know us by now.
Well, we're talking about the new thing which has happened post-US market close last night, which is the fact that one of the three large rating agencies in the US has downgraded US's sovereign rating. Sovereign credit rating has been downgraded by Fitch. The other two, of course, are S&P and Moody's. So the rating has been moved one notch lower from AAA plus, from AAA to AA plus. So it's a one-notch downgrade. Fitch has basically cited fiscal deterioration, the standoff on the debt ceiling, etc., etc. I mean, the general kind of complaints with the U.S. debt levels and the completely dysfunctional political situation out there. So these fiscal cliffs and standoffs, etc., have been discussed quite a bit. The last downgrade to the U.S. sovereign rating was by S&P. That was back in 2011. Market reaction, by the way, so far, if you look at U.S. rates, you look at, which is fixed income, you look at Forex, the dollar, or you look at equities, right? I mean, all of it has been mild. Remember, all of this came through post-U.S. markets. I just want to kind of halt there 1 second and make 2 or 3 points. If you're wondering, and this sounds like a big headline, right? The largest economy by far in the world getting downgraded by one of the 3 big rating agencies certainly has shock value. But I would argue and say that the shock value this time around is not as large as it was back in 2011. 2011, I remember, I think, it was a Saturday for us. And it was out of the blue. It was a jolt to the system. And for some time, there was a bit of risk aversion, which we had seen. This time, because of what happened in 2011, there is a precedent. And, it's kind of well understood. That is point number 1. Point number 2, if you're interested in knowing what is the impact on markets, go back to the 2011 experience. What happened? I mean, a rating downgrade basically means that borrowing costs go up, which means yields go up. After 2011, S&P's downgrade of the US sovereign rating, the opposite happened. Yields actually went down. Bonds went up. The reason is very simple. Despite the rating downgrade, there was risk aversion. What happens in risk aversion? People go to the safest instrument that they know, and that still remains the U.S. Treasury. U.S. government bond is the safest instrument in the world, despite the fact that the rating for the U.S. got downgraded. So that is the experience from 2011, and that is the most simple, direct channel through which equity markets, etc., get impacted. So, I mean, this time around, we can go into other details, etc. But the point is this, that the impact, perhaps, it's more well understood. There is a precedent. And like what we saw in 2011, I mean, it doesn't have to work like how they say it in textbooks. The U.S. Still enjoys extraordinary, exorbitant privilege, right? I mean, U.S. exceptionalism. And that's the reason why, despite downgrades, etc., things have not really moved that much. So that's, a quick bit as far as the U.S. Action is concerned. Now, overnight, even before the Fitch rating downgrade came through, for the U.S. market, you had the 10-year, which has topped 4%. You've got the dollar, which is now above the 102 level. Both these, at the margin, are negative. They're not positive for emerging markets. Equities closed lower. The S&P was down about 0.25%. The Nasdaq was down about 0.4% as well. Now, to put all of this into levels in terms of how to trade the market from here, the Nifty is closed just below the 19,790 level, which is the touch point on a falling trend line. From the recent high, there is a trend line which is falling. So these levels will also keep coming lower. But we left off just under 19,790. The close was 19,733. So that becomes the first resistance on the way up to take out this falling trend line. Supports come in at the 20-day moving average, which comes in at 19,616. That is right under where the Nifty is closed. For the Bank Nifty, again, we're sitting just above the support, which is 45,408, and we are not very far away. We closed around 45,600. That's the level to be defended for the Nifty Bank. And once we do that, I mean, maybe we'll look at the high levels once again. Let's have the GIFT Nifty up on the screen. The fact is, and we said this yesterday as well, the trend still remains up. That's not been damaged, but some consolidation, a quiet day like yesterday once again, I think I would take it with both hands without any complaints whatsoever. So do we.